So let's just go through the investor emotion cycle. You've probably seen this before. This is put out by American Money Management. It's a pretty good one. So optimism is where we begin on the investor cycle. The market, notice this line is going up, and then the market keeps going up. Oh, we're excited. And then we're thrilled. Wow, I feel great about this investment. This is a great idea. I started buying something that's going up. It's really working out. And now we're at the moment of max financial risk. We're getting into that top. This is what we would call stage 3, right? As we're getting up here after stage 2, then stage 3, euphoria, everything's great. And then it starts to go down a little bit, anxiety, and then denial. Oh, this is just a temporary setback. I'm a long-term investor. They turn into long-term investors after they don't sell and close out their trade, right? So they were going to buy this and just make 20%. It goes up, and they forget, and then it starts to come back down like, well, I'm a long-term investor. Everybody turns into long-term investors in the bear market, right? And then they're in denial, and then fear, and then desperation, and then panic, and then capitulation. This is where they start to sell. Well, maybe the markets aren't right for me. I shouldn't have done this. I shouldn't have bought it. I guess I'll just get out now. And then total despondency after they sell. This is, by the way, is the moment of maximum pessimism in the market, which is the point of maximum financial opportunity, and they're selling. And then they're depressed because everything's down and they're despondent. And then it starts to go back up, and there's some hope and relief, optimism, and here we're going to buy it again, right? And we're going to go through the whole cycle again. And what we find is that the moment whenever the euphoria is high and the markets are going up, 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 that is where most people don't know what to do, right? But they know what to do when it comes down here to the maximum financial opportunity. This is the greatest time here to be buying, and they're selling. So, this happens. This happens over and over. This plays out over and over and over again all the time in every market. And what we have to do is we have to know this in advance as investors and not fall for this so common thing. And by the way, living through 2022, this has been 2022, hasn't it? I mean, if you're new to the investing world, I mean, you just lived through some of this right here, right? Anxiety, denial, fear, desperation. Everybody's becoming a long-term investor. Panic, capitulation, despondency. People don't, the markets aren't good for me. I guess the investing, I guess this is not good for me. I shouldn't really be trying to invest or trade. I guess I shouldn't do this, right? Right here, they're beginning to say this. People are finally beginning to sell. People are finally just starting to say, it looks like there's a bear market intact. Yeah, there was a bear market. There has been a bear market. Been a bear market for a long time. It's been a long-term downtrend for a long time. The S&P 500 has been below the 200-day moving average, which is a major signal, for over 150 days. So we've been here for a while, right? And when you finally get down to these painful lows, you finally start to capitulate. And that's usually the time whenever things start to turn around. And that's what we've been seeing lately, is we've been starting to see this a little bit of hope. We're starting to see a little bit of hope, maybe even some relief here, right, as it starts to go back up. But the opportunity to buy has been staring us in the face now for a while, right? And hopefully you've been hearing me pound the table about dollar cost averaging and don't stop right now. Don't stop right now, whatever you do. If you're dollar cost averaging, don't stop now. Don't stop now.